Assalamualaikum and hi. We are from Group 3 and we will be presenting our group project. And this is our team member.
For the part A, which is question 1, explain briefly about the MFRS 8. MFRS 8 is actually operating segment. What is actually operating segment? Operating segment is actually component of entity that engage in business transaction which they may earn revenue or occur an expenses, including revenue and expenses with other component within the same entity. The operating segment report is reviewed by the CODM, which is the Chief of Decision Making, to make decision about the resource allocation and also for the performance assessment of the company. For the measurement, the MFRS 8 does not prescribe measurement policies for the information to be disclosed. Instead, the amount is mainly on the information presented to the management. It's called as the management approach, or the other ones is the true eyes of the management. Next one is for the disclosure. For the disclosure, there are 3 things that the entity need to provide, which is the first one is general information. General information about the factors used to identify the entity reportable segment, the judgment made by the management, and also what type of product and service are provided by them. The next one is information about the profit or loss and also asset and liabilities. And the last one is about the reconciliation, which is reconciliation between the operating report with the company actual financial report. For the question 2, which is explain about the CODM and provide 2 examples publicly listed company that using CODM. The first one is what is definition of CODM. CODM is stand for the Chief Operating Decision Maker. It is actually as a function, not necessarily a manager with a specific title. That function is to allocate resources of the company and also assess performance of the operating segment of the company. Often, the person who hold the position as CODM is CEO, which is Chief Executive Officer, and also COO, which is Chief Operating Officer. But in other terms, they also may a group of the director to become a CODM instead of one person. 2 examples of the public listed company in Malaysia which have CODM as a function, which is the first one is Mr. DIY. The person is Ong Chu Jin Adrian. The position is as a CEO and the appointment is February 2019. The next one is Nestle. The person is Philip Navratil, which is the position also as a CEO and the appointment date is September 2025.
Next, I will explain the 2 types of segmental reports used in financial reporting, which are business segment and geographical segment. First is the business segment report, which groups products or services that are similar in nature. Companies must report revenue for each product or group of similar products. This helps users see which business activity actually generate income and give transparency on how different divisions perform. The second one is geographical segment report, which combines 2 things, which are revenue by region and non-current assets by region. Companies must report revenue and major assets for the home country and for all foreign countries. If any country is significant, it must be shown separately. This helps users understand where the company is operating strongly and how assets are distributed across locations. For the business segment, we use the IJM Corporation Berhad. In quarter 1 of financial year 2024 versus financial year 2025, the construction segment grew the most, from 307 million to 540 million. The property, manufacturing and quarrying, and plant and equipment segments are dropped. But overall, IJM's total revenue has increased from 1.22 billion to 1.40 billion. For the geographical segment, Sunway Berhad's performance varies across countries. Malaysia grows strongly, with revenue increasing from 5.16 billion to 7.28 billion, showing it is the company's main market, while India decreased significantly, with revenue falling from 364 million to 79 million, and the UK had a small increase in revenue, but that region still made a loss. Overall, segmental reporting helped us understand which business areas and which countries truly drive company performance.
Now we will be moving on to question 4 of part A. The question asks for 2 benefits of segmental report for financial statement users. As my team member had already explained what a segmental report is, I would like to share with you straight away the benefits. And it is the segmental report enhances the transparency of financial statements, ensures compliance with regulatory requirements, also enabling more accurate decision making at management level. For the first point, enhancing the transparency of financial statements. in which it could help any possible or existing investors to understand better on where the company's profits and losses are coming from. The transparency of segmental reports reveals small details that make ascertain the trust of investors as scientific ensures compliance with the regulatory. Hence, investors will have better prediction on the Sunderby's future earnings. Next, through the segmental report, the management of Sunderby may identify which part of their businesses are performing well and which are not. In the case of segment by geography, the statement shows a already satisfying increase in total revenue and total profit before interest and tax from 2023 to 2024. However, there is a significant drop in profit before interest and tax in the region of China, from having profit of RM 453 million to loss of RM 116 million. This statement perfectly shows why segmental reports are crucial because the struggling region were hidden behind highly profitable region. Through this report, management will be extra alert on the changes, hence will start to execute strategic planning to prevent bigger loss.
Next, we move to part B, which is MFRS 134, Interim Financial Reporting. I will briefly explain what MFRS 134 is about. MFRS 134 applies to an interim period, meaning any reporting period shorter than a full financial year. An interim financial report can be a complete or a condensed set of financial statements, and it serves to update users on new activities, events, and changes since the last annual report. The objective of this standard is to prescribe the minimum content of an interim financial report and to establish recognition and measurement principle for interim periods. It ensures financial information is timely and reliable, helping users understand the company's earnings, cash flow capacity, financial condition, liquidity, and performance during the year. For recognition and measurement, entities must use the same accounting policies as in the annual financial statement. Seasonal or occasional revenue, such as dividend or grants, must be recognized when earned. And lastly, uneven costs can only be deferred if this treatment is acceptable at year-end. In summary, MFRS 134 ensures companies provide consistent and up-to-date financial information throughout the year.
Next is question 2. For this question, I need to identify two significant events and transactions, and I decided to choose Ajinomoto Berhad. The company's year-end is on 31st March, and I chose to use the first quarter, which covers the period from 1st April until 30th June 2025. The first significant event is the commitment for the purchase of PPE, which aligns with paragraph 15b, subsection E. I extracted this information from the statement of cash flow. In this quarter, the company reported PPE purchases worth of 1.3 million ringgit. This shows that Ajinomoto continues to invest in its facility, even though the spending in this first quarter was relatively low. And it is considered significant because it would affect Ajinomoto's assets and cash flow. The second significant event is the dividend paid by the company in accordance with paragraph 16A, subsection F. Based on the statement of changes in equity, dividends paid of 24.8 million ringgit were recorded as at the end of the first quarter. This is considered significant because dividend payments reduce cash and retained earnings, therefore it would directly affect the company's financial position. Next, we will move on to the question 3, which requires identifying the interim reporting periods for the current and comparative interim financial statements. For this question, I choose Borneo Corporation Berhad, which has a financial year end of 30th June. I used the third quarter, which covers the period from 1st January 2025 until 31st March 2025. First, for the statement of comprehensive income, the current interim period is from 1st January to 31st March 2025, and this must be compared with the same quarter in the previous financial year. For the year-to-date period, it would be from 1st July 2024 to 31st March 2025, and this also compared with the same year-to-date period in the previous year. Second, for the statement of financial position, the current end of the interim period is 31st March 2025. Meanwhile, the comparative date is 30th June 2024. Lastly, for the statement of cash flow and changes in equity, the current period is from 1st July 2024 until 31st March 2025, and the comparative period is from 1st July 2023 to 31st March 2024.